as you know, I'm now a Bitcoin bull. We dodged the entire 2022 bear market. I shared my entry at 17,433. Lars online is gold. Bitcoin is back. But instead of getting drunk on our own euphoria, high-fiving and patting each other on the back, let's put on our black hat. Let's look for problems instead. And there are a few threats. USDT, legal actions against Binance, Grayscale, DCG contagion from Genesis that we talked about yesterday, and what about the miners? Miners get a lot of BTC. What the miners are doing is the whole idea behind the 4-year cycles. In the past, mining has only been really profitable if you held on to the Bitcoin you mined at lower prices, and then when price went up and mining difficulty increased, then you sold them. While during periods of lower prices during say 2020 or like now, not so much. So miners built up quite a stack of Bitcoin. Now what if the miners start capitulating? There could potentially be a lot of BTC being dumped, killing off this bull market. Could it even be so that some large miners are driving this entire pump? Perhaps they've already given up due to the higher energy prices, and they're doing one last pump to exit dump their BTC at higher prices. Is it? Let's dig into the facts. Let's find out. First, let me explain some concepts if someone is new to this industry. Bitcoin miners verify transactions on the Bitcoin blockchain. In return, they get rewards paid in BTC. That's why miner profitability is heavily dependent on the Bitcoin price. Miners also need to invest in hardware, and they need to pay OPEX to pay their energy bills and so on. So they need to decide on how many of the mined BTC they are to sell right away, and how many they should hold for possibly higher prices in the future. Their profitability will be highly dependent on that decision. And miner capitulation being thrown around, that simply means a situation where profits are so low that some miners choose to quit and just can't operate anymore. The most unprofitable miners are then forced out of the market. That hash power will then leave the network. Then difficulty adjusts. That means that solving the math problem becomes easier, and it becomes more attractive to join as a miner again. Miners are not the same as nodes. A node sends and receives transactions to and from other nodes in the network and verify the validity of those transactions. Nodes don't receive BTC rewards. The mining space is very competitive, and because of Moore's law and so on, new hardware beats old systems quickly in both energy efficiency and hashing power. For that reason, the total hash rate of the network is getting higher and higher and higher, and probably it has also gotten more and more difficult to stay profitable as this industry has gotten more and more competitive, more and more mature, and more advanced. Since the first block of Bitcoin was mined in January 2009, the total hash rate, which is the blue line here on logarithmic scale, has increased massively. And since the peak of 2007 bull run, the hash rate has gone up from 13 million terahash per second to 273 million terahash per second. That's a 20 times increase, or about 80% per year. Especially the US miners expanded their business and picked up the hashing power that left China after their bans around May 2021. Here is China. You can see that some mining actually came back. Here is United States. And today the US covers about 38% of the global hashing power. 2022 was a tough year for Bitcoin miners, as the miner revenue fell from about 74 million in October 2021 down to a low of 10 million, now bounced back to 22 million, according to this estimate. Still, that's a 70% decline from the top, even down to today's levels, in little over a year. In the same period, electricity costs rose fast. In many countries, like here in Sweden, prices increased by several 100%. Same in the US. In August 2022, spot power prices in West Texas was nearly 3 times the average price during the month of August in previous years. Also, with the production and transport problems in the end of 2021 due to COVID, many miners had a hard time even getting new mining equipment, which they needed to stay competitive. Hardware was expensive, and many miners took to expensive short-term loans to cover their costs with the hopes of rising Bitcoin prices in the future. Then when price continued to fall instead during the rest of 2022, some of these miners suddenly faced severe liquidity problems. Hardware took months to get delivered, and many were forced to sell their unused hardware for a fraction of the price that they had bought it for to even stay alive. There is no exact number how much mining 1 Bitcoin costs, because it relies heavily on the location and the actual price of electricity they are paying and what equipment they use. But based on overall energy estimations, we could take a rough guess that it costs around $21,000 to mine 1 Bitcoin today. And for the past couple of months, it has probably cost more to mine a Bitcoin than a Bitcoin has been worth. A situation which we had in 2020 before this large run-up of Bitcoin price. So if we're a detective and looking for motive, the Bitcoin mining industry had a huge incentive to change this situation. A lot of mining companies are starting to struggle under these conditions. In September, Compute North filed for bankruptcy. Bitcoin miner Stronghold Digital had to restructure their debt and even return miners to their lenders. Core Scientific, the biggest public mining company by hashing power, warned at the end of October of a potential bankruptcy. Their treasury went down from over 9,000 BTC in April to only 62 BTC at the end of October. And they warned that they might run out of cash by the end of last year, 2022. Fire trucks are out. And as a reminder, total hash rate today is about 273 terahash per second. Publicly traded miners represent only about a third of the total hashing power, but has only a fraction of the total miner reserves in terms of BTC. The rest of the hashing power and most of the reserves are held by thousands of single miners and smaller mining companies. Mining pools combine them to optimize the mining process and distribute the mining rewards based on the provided hash power. And probably many of these are mining for profits, like publicly traded ones, but maybe some of them focus more even on the ideological aspects to secure the decentralized network. Who knows? End of last year, public miners held about 30,000 BTC in reserves, but the total amount of known miner reserves are estimated to a whopping 1.8 million BTC. I'm actually not sure if the Satoshi wallets are considered part of this. If anyone knows that, that would be great to know. That's about 1 million, 1.1 million BTC. But even if it's not, then there is at least 700,000 BTC that stay in active miner pockets and could be sold to pay for electricity bills or other expenses, or sold on the market if the miners decide to quit and give up. And that, folks, is even more BTC than Grayscale has in the Grayscale Bitcoin Trust. Last year, miners started to sell their BTC reserves over the year and dropped down to levels that we hadn't seen since end 2021. It was in November 2022 that we saw the first signs of hash rate capitulation, and then it got even worse exactly towards the end of 2022. Then as a result, the network difficulty adjusted down shortly after, and it seems that miners used the lower difficulty to turn some of their machines back on, or other miners joined, so the hash rate quickly recovered to the same levels as we were in early November. Perhaps hard to see in the graph, but if you look at the blue line here, you can see that it does drop here, and it stopped increasing here. It dropped here in 2018, it dropped here in 2021, and if we are seeing hesitation, capitulation among the miners, does that give increased confidence that this is the bottom of this cycle? Are we there yet or not? This model here, difficulty regression model, tries to estimate an all-in sustaining cost of production for Bitcoin. That current estimate lands at 19,775, which is within the range of the other estimations. In the past, it was necessary for price to go below the regression value for miners to kind of start giving up and bring the network difficulty down to lower levels from where a new cycle can begin. And if we zoom in then, we see the same thing we saw previously. BTC price did drop below the sustained production cost during November and December 2022, before this pump started. Even at the darkest hour there. Let me clarify that bankruptcy of some publicly traded mining companies or some other miners giving up is not going to bring down the Bitcoin network. or the Bitcoin price by itself much. The market is much bigger than it was some years ago, and selling of a few thousands BTCs would be easily absorbed. It's not going to matter. What's concerning though is this blue number here. Miner reserve, like 700,000 Bitcoin, even if we would exclude 1.1 billion, assuming those are Satoshis and those are lost. Where are those Bitcoin? And are those guys going to keep mining and secure the network even if it's at a loss? Or will they panic sell to cover their costs? Then Bitcoin kicked off 2023 with this huge rally. If you followed our entry, you're up like 30% in 2 weeks, which of course must be a huge relief for those struggling mining companies that had to mine at a loss. 40% from the start of the year, but we can also see that difficulty, which is this blue line, also jumped up significantly from that point when we bought on 10th of January. And while the leading BTC miner Core Scientific had to file for bankruptcy by the end of 2022, stock prices of Bitcoin miners have totally exploded during this year. Marathon Digital Holdings from $3 at the beginning of the year to $9, Bitfarms 0.4 to 1.1, Northern Data from 5.7 to 11.7, an enormous increase. The reduced mining difficulty at the end of December helped miners to mine at lower costs. But miners seem to have used some of the pump to get some cash in the bank. If you look here at the miner reserve on January 12, it was 1,847. Today it's 1,836. So that's 11,000 Bitcoin. Say they sold them at 20,000. That's $220 million. And this is a fairly significant decline if you look back on the previous years of history, at least since the COVID dip. Miner difficulty is now back at all-time high. And looking at most estimates, Bitcoin mining would now be mildly profitable again. But as you see here in all these models, right now price is probably just above or barely above what it costs to mine a Bitcoin. These people are not in this market to make like 1 or 2% on the margin here. Of course, they want this situation, that you mine down here and then Bitcoin goes from like 20k to 65k and then you start selling. Not that you're running like a struggling business here at the bottom. That doesn't make you a billionaire. So what I would have liked to see is that these miners are increasing their holdings and then price goes up, then they sell, then they increase their holdings, try to sell the top or something like that. Now, that's not exactly what they have managed to do in the past. And if there's one thing we've learned during 2022, that is that many of the crypto billionaires aren't exactly geniuses either. Things have gone pretty bad for many of them. Still, many of these miners are significant players. Unfortunately, that's not really what we're seeing here. It's not so good sign that these miners have started offloading here. I want to see them increasing their holding as price go up. At least some of these have actually offloaded here. Not a good sign. And with sustained production price and Bitcoin price so close, this is pretty sensitive for a Bitcoin price drop before this turns unprofitable again. So, what is my conclusion from reading all this? Well, actually, I am less worried about miners killing off this rally than I was before. I don't see a huge amount of miners throwing in the towel exactly here in the market, especially as price has now actually climbed above the level where it was probably profitable. But one chart that I will definitely be coming back to and track going forward is this one with the miner reserves. And this one is from cryptoquant.com. No affiliation. And if the real situation behind the current pump is that there were large miners that were getting heavily squeezed here, mining at a loss, running out of money and desperately needed the price to go back up, and somehow orchestrated this turnaround and supported the price with this pump, I am fine with that. People say, oh, but this is manipulation. Yeah, of course it is manipulation. Large players manipulate the market. It's the same thing in stocks. It's the same thing in all the markets. It's not that it's a group of community members sitting around the campfire and singing Kumbaya. In markets there are buyers and sellers, and the big ones generally try to take the money from the small ones. It's what Wyckoff explained over 100 years ago, because he was so upset that the large players were kind of screwing over the smaller smaller players. So I think the big takeaway here is that we have to be aware that there are large players that's trying to move the market. We should try to uncover what they are actually doing, which we will not do on social media. They will probably try to spread misinformation campaigns to get people to sell when they're trying to buy, and vice versa. We have to uncover it in the price. Is the trend up? Is the trend down? We can uncover it in the volume profile. You could see that there was an enormous amount of coins changing hands around this level, and then suddenly price started running up. Don't get scammed, guys. Remember, my course with Lars Online is only available from www.ctolarsson.com. You click here. Everything else is a scam. I will continue to track these miners. I think this was a very interesting and insightful exercise for me. I hope you learned something. I will continue to update on that. Like and subscribe. Thank you, tack. CTO Larsson out. Hej då.